Hey everyone, welcome back to Edgeverse. Imagine this. Just days ago, Nvidia dropped a bombshell. They're shelling out around $20 billion to license cutting-edge AI inference tech from startup Groq and bring its top talent on board. That's their biggest deal ever. But at the same time, the guy from The Big Short, Michael Burry, is doubling down on his bearish bets against Nvidia, warning about an AI bubble. So, is Nvidia unstoppable, or is trouble brewing? Today, we're diving into the latest 24-hour snapshot on Nvidia, the highs, the risks, and what it means for investors. Stick around, because this could be huge. Let's start with why Nvidia is still the king of AI. They own about 80% of the market for AI accelerators, those powerhouse GPUs that train and run massive models. Their CUDA software ecosystem, it's like the glue that keeps everyone locked in. And the numbers are insane. Data center revenue exploded from just over $4 billion a quarter back in early 2023 to more than $35 billion recently, with fiscal 2025 sales topping $115 billion and gross margins over 70%. That's premium profitability, folks. Nvidia briefly hit a $5 trillion market cap this year, the first company ever. And as of right now, it's sitting strong around $4.7 trillion, with shares near $190. The big news shaking things up? Nvidia's massive move on Groq. This isn't a full takeover. It's a non-exclusive licensing deal for Groq's super-fast inference chips, plus hiring their founder, CEO, and key team. Commentators are calling it a smart play. Nvidia expands capacity for next-gen AI inference, while neutralizing a potential rival. It's strategic brilliance, securing tech that could challenge them down the line. This reinforces the bullish story on AI data center growth exploding. But here's where it gets interesting. Not everyone's buying the hype. Michael Burry, the investor who predicted the 2008 crash, has a sizable short position on Nvidia. He's reigniting the AI bubble debate, arguing valuations have runway ahead of fundamentals, and even criticizing things like chip depreciation accounting. Other headwinds: US-China tensions and export controls are still a thorn. Nvidia is largely shut out of the massive Chinese AI market, which has caused big drawdowns before. Competition is heating up too. AMD, custom chips from hyperscalers like Google and Amazon, and even startups. If margins slip from that 73% level, or if the AI spending boom slows, the stock could get hit hard. Analysts lay out wild scenarios to 2030. Massive upside if Nvidia dominates, or a sharp re-rating lower if the narrative falters. Overall sentiment right now? Neutral, but fragile. Fundamentals are rock solid, and the Groq deal is a win, but high expectations and big-name bears like Burry add volatility. So, what should you do if you're holding Nvidia or thinking about jumping in? For current owners, don't panic sell. Consider trimming positions into strength or using options to hedge, like covered calls or protective puts. That way, you stay exposed to the long-term AI growth without full downside risk. If you're looking to buy, be disciplined. Dollar cost average in, don't chase at peaks. And think broader. Diversify into other AI plays like foundries, networking, or cloud providers for less single-stock drama. Bottom line, the medium-term outlook is still bullish on AI dominance, but play smart with scenarios in mind. Wide dispersion between bull and bear cases means anything can happen. What do you think? Is Nvidia heading higher in 2026, or is Burry onto something? Drop your thoughts in the comments below, hit that like button if this helped, and subscribe for more real-time market breakdowns. Turn on notifications so you don't miss the next one. Thanks for watching. See you in the next video.